Where we are today in I can tell you when we're sitting here and talking 2 or 3 years from now, we're going to be somewhere else because the pace at which it's being adopted, that we don't even know what it's going to be utilized for yet. Agentic AI, where it's anticipatory and changes the way that people think, very important to what it means for retail real estate and the retailers themselves.
Today, I'm excited to welcome my friend Dana Telsey to Leaning In. She is the Chief Research Officer and founder at Telsey Advisory Group, and she spent more than 3 decades as one of the most respected voices in retail. She's been the number 1 ranked specialty stores analyst by Institutional Investor 7 years running, and she sits on Barron's list of the 100 most influential women in U.S. finance year after year. And if you've turned on CNBC or Bloomberg lately, you've almost certainly seen her breaking down the latest retail earnings reports or consumer trends. What I love about Dana's perspective is that she sees retail through the lens of the brands and the consumer and someone who worked in stores when she was growing up, giving the rest of us in retail real estate a clearer view of what's driving demand for our space. Dana, welcome to Leaning In.
Thank you for having me.
Hey, great to be with you today. Hey, so you spent your whole career in and around retail, starting at Barron Capital, then Bear Stearns, and eventually founding your own company, Telsey Advisory Group. For listeners who don't know about you or know your story, tell us how you got into retail research and what it is that you do that's different from others.
Sure. Thank you for having me again. I think basically I grew up in Manhattan in New York City. I lived in the same building as a man named Ron Barron, who runs Barron Capital and the Barron Asset Fund. He's involved in the stock market. My family was in retail. We had a bookstore on Madison Avenue and 51st Street. My grandfather was cash register number 1. My mom was number 2, and I was number 3. My grandmother worked at Bergdorf Goodman. So it's always been about the consumer. It's always been about stores. It's always been about retail. With Ron Barron, he and my sister walked their dogs because we lived in the same apartment building, and he knew my mom. And so he was a family friend. And he said, I'm going to start my own company. Would you want to work there? Because I was in college. And I go, well, I don't even know what you do. You're just this Cocker Spaniel man. And he goes, oh, I'm in the stock market. So I went to work for him summers in college and then for 7 years afterwards. And he taught me how to analyze stocks. And he's an expert, particularly in consumer stocks. And it couldn't have been a greater fit, being able to marry the quantitative with the qualitative. So I was there for 7 years. And then a lot of times you can't live where you grew up. So I went to that was the buy side of the business because he invests. I went to the sell side where stockbrokers are, and I was an analyst. And so I would recommend names to a lot of institutional investors. And so only in retail. And so in this world, there's typically these institutional investor ranked analysts. And I became one within 11 months, very fast. I was number 1 for many, many years and decades. And then in 2006, when I was at Bear Stearns, you can't live where you grew up sometimes. And I had 18 people on my team and you couldn't promote from within. And to me, you're only as good as your team. And so what did I want to do? I could have gone to the buy side, private equity, you name it. But I felt we had a brand name. And now it's 20 years. So 2006, I started Telsey Advisory Group. We're 20 years old. And what I'm most proud of is of the 32 people in my company, 4 of them I've worked with for over 20 years. They were at Bear Stearns with me. And around 19 of the others here have been with us at least 15 years. So I'm a true believer in teamwork makes the dream work. We have 3 areas of our business. We do research, and it's all about consumer all the time in all different areas, whether it's home improvement, grocery, consumer electronics, apparel, department stores, luxury goods, beauty, you name it. We basically identify what brands can work and how do they work by using qualitative and quantitative. And we're those analysts on TV with what does the earnings algorithm look like? Is sales going up or down? That's what we do, figuring out how companies grow so they can have a competitive moat and scale. So that's the first arm of our business is research. Our clients there are typically the institutions, institutional investors. We have a capital markets area. That's our second line of business. We're involved in investment banking with debt capital markets and our co-managers on fixed income transactions. And also we're in equity capital markets, we're co-managers on initial public offerings. So back in 2021, when there was the flood of consumer offerings, everyone from a Levi's to Birkenstock, a ton of them were involved in those transactions because we have the backbone to the portfolio managers and analysts who buy those type of stocks. And we have consulting where we consult in a lot of the different REITs. And basically, it's all very personalized and bespoke because it's basically coming in and talking with leadership teams, with leasing teams, what we're seeing of who's growing, who's not growing, and with all different types of retailers and what we're seeing retailers do in thinking about their physical space. So you name it, it's always been about consumer for me. I don't like it. I love it. And you're a student every day in seeing what the consumer wants. So it's super exciting and I couldn't be happier. And while TAG is my company, Telsey Advisory Group, TAG has been around for 20 years. My grandmother worked until she was 89. I expect to work way past that. And it's exciting every day. As my
Well, great.
the CFO, CEO of my company, every day I call him after our morning meeting. Our morning meeting is at 7:30. I call him at 8 and I say, Jerry, how are we going to win today? And it could be in any line of business, whatever it is, but I'm a glass half full kind of girl.
Well, I've been around you a lot over the last 20 years, and you are always fired up and energetic about talking about retail.
Thank you.
And that is fun. That's fun to be around. So, next question, what's changed most about how you analyze retail today versus when you started? And how is AI changing that?
I'd say what stayed the same is visiting stores. I'm a huge believer in visiting stores. I'm in them at least every week. I'm talking to sales associates. I'm seeing what consumers are gravitating towards. I'm watching the checkout lines to see the traffic and how many items. I'm looking at stores and seeing what's full price and what's on promotion and our inventory levels in stock. But what's changed? Definitely online, the internet. It provides access and information. And probably one of the biggest changes, I'm sure you remember, like I did around 10 years ago, all we were fighting is the same thing. Oh my, everyone's going to shop online. They're not going to shop in stores. Fast forward, you had COVID. Fast forward to today. And what do you hear? The Gen X consumer, where do they like to shop? They like to shop in stores. And why? Because it gives the physical touch point and the social interaction that all of a sudden you communicate. And you know what else it does? It's an experience. And what comes from experiences? Memories. So what's changed is online, but it does give you access. It does give you information. What stayed the same is visiting stores. And when you think about AI, I think AI is about the curation of the assortment and personalization. I think we're still learning, and I think it's still very early innings, except for some of the larger companies who spent a longer period of time and longer dollars on it. But everyone's still learning how to use it. I think the consumer is learning how to use it. But what it is teaching people is so what sells? What sells better in the Northeast versus the Southwest? Should I have more winter coats here versus there in whatever month it would be? And it's teaching about personalization in terms of, wait, this consumer or this person only buys these types of pants or whatever. And so then they can figure out where to go. So it's making everyone smarter, but it's still a learning curve. And the other thing that's changed is the metrics have changed. When you think about what companies are talking about, it used to be, here's what our sales increases are, or here's what our stores that have been open longer than a year, known as comparable store sales, here's what those numbers are. But there's a new metric that companies are talking more about, and that's the KPI of new customer acquisition. How many new customers are you acquiring every quarter, every year, whatever it may be? The more you know about your customer, the more you can gain share of their wallet. So it's new every day, and that's what keeps it so interesting.
That's a great insight. So, Dana, macroeconomics are, at the forefront of everybody's mind right now with so much uncertainty in the global economy, uncertainty here, all of that affects the consumer. How are you seeing the macroeconomy affecting the consumer? Has anything surprised you? And do you have a sense of what the impact might be if inflation continues to be above trend, if interest rates stay high for a while? Give us your thoughts on both those. I know that's something that the CEOs you talk to a lot are concerned with right
It
now.
is top of their mind how the consumer is, what's changing. Everyone's looking around the corner for, is the pace of growth going to slower and adjust? But what we have been seeing, you've seen the consumer trade down. You've seen that. And look what Walmart says. Their fastest growth is in their higher income consumer. So you're seeing that. You're seeing the fact that when you think about the macro pressures, we talk about it as inflationary headwinds, rising gas prices, and depending on what part of the country you're in, you could see stark differences. And I always thought that $4 a gallon was a headwind. But you know what? Consumers are still spending, even though it is $4 a gallon. But the other thing that you're seeing on the macro side, certainly in this first quarter and now into the second quarter, you've seen tax refunds. And the benefit of those tax refunds gave consumers the ability to continue to spend. So I think the headwind on gasoline prices, we know that for companies, freight is typically negotiated on an annual basis, and that was done already. For consumers, I think we're beginning to see it. You've heard, look what Walmart talked about. They just mentioned the fact that consumers now are filling up their cars and doing it like for $10. They're not filling it up to the whole amount that the car can hold, but to a dollar price point of what they themselves can afford. So very much watchful, very much a key concern, and very much something that's going to be top of mind. And what we always know is there's always a surprise. It feels like whether it was COVID, whether it was, oh my, now you're all of a sudden starting to see consumers buying things because of the stimulus you got. We have surprises every year. What's been amazing is the agility with which how companies can react and can react fast.
Thanks. So, are there any red flags we should be watching for if, hey, gas prices and inflation stay up for so long, if this starts to happen, then I'm really going to worry? Is there anything out there?
Yeah, I mean, I watch the labor markets. If there are cracks in the labor market and wage growth, you don't want to see wage growth go below inflation, because then it suggests that consumers' compensation
We're
is
getting pit.
keeping up with the pace of daily living expenses. So we're
Yeah,
watching the labor market and wage growth very carefully relative to inflation.
makes sense. So, let's talk about the consumer. They have continued to spend, like you said. Where specifically are they spending? Where are they pulling back? And what has surprised you? Since the war started, prices are up, or prices up, inflation.
I think overall, the word to use about the consumer, they've been so resilient. The surprise coming out of the first quarter and the commentary from CEOs is that even second quarter to date, business is remaining good. I just met with the CEO of Steve Madden last week. Fashion footwear, occasion footwear trends are very popular. They're doing very nicely. I'd say the spending on newness and innovation is important on soft lines or apparel, what people don't have in their closet. And you're seeing companies with the increased investment in marketing spend and the viral nature with influencers and how TikTok influences particularly what people are wearing. That newness is very popular. I'm sure you can imagine today, because I'm in New York City. That's where I live. That's where I am right now. I literally my office is right on Fifth Avenue in the 40s. Crossing 42nd Street, there are people selling, you can imagine what, Knicks t-shirts. And you could see lines growing for those Knicks t-shirts because the fingers are crossed for many for Saturday night. So all of a
Yeah,
sudden, newness and innovation matter. Where I'm seeing the pullback is on home. The pullback is on a focus on food and consumables, because you have seen, look what McDonald's has been saying, value meals. The price of food has gone up a lot and people are paying careful attention. But the surprise is the resilience and strength of demand. I watch the lower income consumer very carefully. they definitely have pressure points, while the rest of the middle and upper seem to be spending, but whether it's more discerning, maybe a little bit, but you're certainly still seeing more full price spending than promo spending because inventories are managed carefully.
Thanks, Dana. Yeah, so from listening to you, the K-shape economy and the K-shaped consumer economy is real. So help us understand a little more what that is, and is the bottom really getting squeezed and the top is on a roll, or are you seeing something a little different?
So overall, I'm seeing we've had the K-shaped economy for a while. Higher income consumers always spend more as they have the ability to spend more. And who knows what's going to happen with this IPO of SpaceX and however many wealthier people are going to be created, but it'll give more optionality. The bifurcation of the K-shaped consumer, I think, will continue to stay around. The lower income consumer concerns, and there always has been. But one of the things you're seeing is value for their dollar. You're seeing that with food. Look at the value meals. You're seeing that with clothing. Look at Primark, Old Navy. You're having a lot more fashion appeal, even at value prices. So the lower income has been and continues to be more discerning. And we're going to be watching that very carefully and watch those traffic trends and spending trends.
Thanks. And you said earlier, people always want to ask you who's growing. You get paid to come tell a company who's growing, who's not growing. So let's talk about that. Categories, which ones are winning, which ones are growing right now. Are there some, and then are there some quietly losing ground that nobody's talking about? What are you seeing?
So what I'm seeing out there overall, the growth, and frankly, in terms of retail real estate, the unit growth, the off prices have been amazing. They're each opening at least 100 stores a year at TJX, at Burlington, at Ross stores, with Ross stores now feeling the expansion opportunity that in the Northeast, certainly with TJX, when you think about other categories like home goods, where they've been so successful and those units are continuing to expand and grow. And Burlington, with some of their new flagships and retrofits, they're opening at higher average annual sales volume. And you marry this with other value players like discounters and dollar stores. We've seen the strength recently of the sales at Five Below, and you're seeing continued new store openings. That's where I'm seeing the growth. I am seeing also growth. Look at beauty. You look at Ulta, which is growing in sales. It's growing in traffic. You take a look where we're seeing active basically going through a stabilization period. And certainly you have Lululemon, where a new leadership, a new CEO is coming in shortly. Or you have Biore and Aloe, which continue to grow and basically being able to expand. They're not as big as Lulu yet. I'm seeing when people talk about luxury, North America is where the growth is, given that certainly the Middle East conflict has some headwinds there. And Europe, you have a slower consumer. I'm seeing continued pressure in home. The home weakness, it really hasn't rebounded, and we still need to see that activation of home. I'm seeing some strength in footwear. You see about the continued focus on Birkenstock, where frankly, they're opening more of their own stores and they sell very well in wholesale. I'm seeing bifurcations in accessories. The growth of Coach continues while Michael Kors is trying to find its footing, while Steve Madden acquired Kurt Geiger, and you're going to see more stores opening. So overall, it and the other new category, private companies, juniors, whether it's Addicted, Brandy Melville, whether it's Princess Polly, you're seeing a new activation of juniors concepts that's proven to be very exciting. So I'm seeing growth, and I'm seeing where what I call it is retailers and brands to be at the top of the retail roller coaster. They always need to reinvent, re-merchandise, and rejuvenate. And one of the things we've noticed is legacy companies are doing this. Gap with a 10% comp, reinventing and modernizing. It's impressive. You saw Ross Stores do it with a 17% comp. We're seeing Victoria's Secret have low double-digit growth in many of their categories. So legacy businesses that reinvent, remerchandise, rejuvenate, or all of a sudden opportunities of growth.
The three R's.
Yes.
Heard it here. You heard it here first. So another sector of the retail business is experiential. And you talked about people really, and we've watched that. Certainly COVID sort of heated this trend up. So entertainment, F&B, beauty, dining, is that, and in a lot of ways, people have asked me, who are you putting in your centers now? Because there's not near as many fashion tenants expanding as, back pre-GFC. But I see a lot of these type tenants are who's filling up our centers today. Do you see that continuing?
Oh, yes. I think basically experiential retail, what COVID did, more people continue to work at home. They still go to offices, but work at home. It created the vibrancy of open air. People can go out for lunch when they're working at home, and then they're picking up their dry cleaning or going to pick up a pair of jeans or getting a new radio, whatever it may be. And I think these experiences of experiential create memories. Look how many in warmer weather areas, look how many outdoor cafes there are. Look at what Ralph Lauren's Coffee has done. Look at what the AOK Cafe at Aritzia has done. And now you're going to have Coach Coffee. Look at Tommy Bahama and their Marlin bars. So experiential retail allows for experiences to create memories. And I think there's only going to be more of that added because you're no longer retail banners. We only sell one category. You need to gain a larger wallet share. And how do you do that? A brand has to say what it does and do what it says. So whatever a brand expands into, it has to marry what the ethos of that brand stands for.
Yeah, let's follow up on COVID. That was a big shock to the retail system. It was really scary at the time, as you remember. And you just mentioned one of the long-term impacts. What are other impacts that COVID had on the industry, good or bad? And what did we learn from that global event?
You know what? I think it finally stopped the discussion of, oh my God, everything's going to go online. That is what it stopped. And it made the presence of physical space more in demand, more wanted. It made retailers invest in their spaces because consumers wanted to get out of their home. If you think about physical retailing, it's a place of social interaction. And that mantra and that meaning and significance came back to the forefront. And so you're looking at it today, and now you have more creativity in physical spaces that you ever had before. And it made the importance of physical space and in person that much more valued. So I remember coming out of COVID when everyone first started going out and doing things, it was all about FOMO, fear of missing out. And
Yeah,
certainly, I mean, you look what's going to happen this year. You have the World Cup, you have the America's 250, you have obviously the NBA Finals. What's happening? You're selling more tickets for events that people want to experience together. That's exciting.
yeah. I hear there's a New York team in the NBA Finals.
Yep, it's what it's all about. Walking home last night, oh my God, there's so many police cars around Madison Square Garden. It's crazy. And yesterday, everyone's fingernails were like, oh my God, could they even win? And eked it out in the last couple seconds. It was amazing.
Wasn't that crazy?
Yeah.
Yeah, I've never been a Knicks fan, but I kind of was for a moment last night. And Jalen Brunson used to be here with the Mavs, so we miss him.
Yeah, well, I will tell you, if you walk around the city and you see all the Knicks t-shirts, the number 11 is what you see the most of.
Wow. Well, he's kind of the quiet assassin. He doesn't say much.
Yep,
He just gets it done.
exactly.
Pretty fun.
Yep.
Good for you guys. So you mentioned you are also in capital market
Yes.
consulting.
Hmm.
Well, as you and I, our last trustee meeting saw, and as I've been experiencing, as I've been out raising capital for some new developments and acquisitions recently, the retail real estate capital markets have raged back.
Yep.
And it feels like that it's really just the last 6 to 9 months.
Hmm.
And that obviously makes some assumptions that retail is going to keep, the retailers are going to keep expanding, consumers going to continue to be resilient. So What do you think about the capital markets timing? They were off for 16 or 17 years. They're just coming back. So do you think, is their timing good? Will the retail industry and the retailer performance make them look smart and justify this euphoria?
Well, overall, you're seeing there's more demand for retail space than there is supply. As you go quarter after quarter and look at retailers' plans for store openings, they're opening stores. They're investing more in those stores. Those stores are fulfilling multiple functions because they're a place where people can come in to buy, but they're also fulfillment and distribution. So I think the usage of the physical space is making it more productive and frankly more profitable. So I think overall, yes. And the fact that we're getting international retailers coming our way too, it only leads to more excitement. So I
So
think this is a good environment, and both retailers and landlords continue to need to invest in that space to make it appealing.
so you think it's a good time to be investing in retail real estate
Yep.
generally?
My retailers are doing well. I think there's more growth ahead of them. I think the newness and innovation is driving more wallet share from existing customers and attracting new ones.
Well, one thing you mentioned that reminded me something I wanted to mention to you and ask you. So we have some retailers in some of our centers doing what appears to be historically, Dana, very low sales per square foot, and they have what appears to be high occupancy cost. But they have no interest in closing. We can't get them to close.
Yep.
And the story I tell myself, or what we believe, is that it's because so much of that store is something other than just a retail store. It's last mile, it's fulfillment, it's try it on here and then go home and order it, etc. Do you think that's the case? And doesn't it make sense, if it is, that the old occupancy cost paradigm should theoretically be changing over time?
I think overall, yes, it's being used for fulfillment and distribution. I also think part of the reason why some of those retailers aren't leaving, and if they're doing low sales per square foot, is where else are they going to go? Because wherever else they go, they might have to pay more money. I think always the dichotomy and between the landlord and the retailer. What's the retailer going to share on what the online sales are that are attached to that store? And that's been a headwind for forever. But one of the
Yeah.
interesting things is, one of the things you hear from the retailers is some of them are willing to pay some more money lately because they know there's not a lot of supply out there. So I think there's negotiations that we hear happening. We heard about it at ICSC, that negotiations are happening if retailers want to stay in those locations, because the landlords, there's three other people with higher sales per square feet that they would love to put in there.
Yeah, I think you're right. Yeah, Dana, I'd love to hear from you some companies that you think are really getting it right now.
Mhm.
And then if you could be so bold as some people you think, might be heading the other direction.
Couple things. I think obviously when you think about who's been getting it right, the results of the off-pricers that has been absolutely stellar, they're getting it right. They're doing brands at a value. They're capturing more customers. They're in convenient locations. I look at some of these legacy businesses like a Gap, like a Victoria's Secret, who all of a sudden, guess what they're doing? They're capturing the new and younger customers. The data insights that Coach gleans from their customer and what product they should produce is very impressive. Some of the data insights showed them that Gen Zs, they like reading books. So what did they develop? They developed these tote bags with a library setting with the marketing around it. It sold out. I was on the phone on Monday with Inditex, who operates Zara. And you think about all the banners that Inditex has, you're going to see more of them coming to the US. There's a very low market share here with Zara, but also obviously their own other brands that don't even have anything. There's more to come. They're getting it right. We have companies where they have new CEOs coming in where they have to go and reinvigorate the brand. Nike is an example of that. I mean, Nike will hopefully see the progress that Elliott Hill is making. It's going to be interesting to see what Heidi O'Neill does at Lululemon and when she starts in September, and hopefully we hear from her before the end of the year. But right now, the watch list in retail is very low. And yes, you continue to have people talk about department stores, but I give credit to Macy's for the bold new chapter and the advancements they're making, both with Bloomingdale's and also with the core Macy's. I want to see if JCPenney can accelerate their reinvention over time.
And
As
Dana,
Kohl's,
what do you like that Macy's is doing? Tell us a little more about that.
new brands. More new brands are coming into the Macy's ecosystem. Definitely into Bloomingdale's because vendors who slowed down are not selling as much to Saks anymore. Bloomingdale's and Nordstrom are getting the benefit. But you even look at Macy's, who's put in new brands. They've begun to invest more in the stores. The 40 million shoppers, the loyalty program has been enhanced. One of the things they're going to do this summer, it's going to be amazing. What Macy's basically, with their 4th of July fireworks that's seen all across the US, they're going to have it on the east side and the west side of Manhattan this year. You have to believe that brings more awareness. Also, when you look at the Macy's Thanksgiving Day Parade, this year it's the 100th anniversary of the Macy's Thanksgiving Day Parade. So they've reimagined some of their stores. They've reimagined around 250 of them now. They're getting better results out of those stores, and you're seeing it in sales and you're seeing it in profits.
Well, that's good to hear. And we are partners with Dillard's in a mall that we bought in Longview, Texas. Dana and I have been just blown away at how, in the kind of retail apocalypse, COVID, and how well Dillard's, who, run by merchants, not by financial engineers, has done so well over these past years. What are your thoughts about Dillard's?
I think one of the things with Dillard's that they're doing better. They're doing more of it every year. They localize their offering to the different regions and different communities that they're in. And they'll do that with influencers. They've brought in new brands. They've updated and remodeled the whole cosmetics area. And they really have modernized in the past 5 years or so. And it's very impressive. Regional in nature, obviously not national like Macy's, but their localization and personalization to the customer with the brands. Look at the results they've delivered. They've been exceptional.
Yeah. Dana, you and I both ICSC trustees, and I've noticed over the last 10 years since I've been a trustee, the talk about the mall business is dwindled. They almost forget about the industry, and we're in the business, and I like the business. I believe in the business. What are your thoughts about the mall business, malls going forward, all the retailers that are mall centric? Give us your thoughts.
I think one of the things we've seen happen with malls, like we've seen retailers, they've all closed some stores in order to focus on the stores that they're strengthened and what they can strengthen and what they invest in. That's what you've seen from some of the malls too. You are seeing there's a huge demand to be in some of those highly productive malls that are out there. Obviously, Simon has a lot of them. Macerich has some of them. And that's been very productive and important. The reason why they invest in the mall, they have the retailers are investing in their stores in the mall. They have other experiential elements, whether it is movie night, whether it is events that happen within the mall. You still have malls that are a destination for social engagement. And I think, if anything, the reinvestment in them have made them more important with the new tenants. It doesn't hurt that you have some new anchors too. Dick's House of Sport has been very compelling and have brought newness there. And the mall having the restaurants, having the goods and the services is compelling. So whether it's a South Coast Plaza, whether it's Fashion Island, whether it's Cherry Creek, Short Hills Mall, there's a lot of very productive centers out there and very productive malls. And I always think that we're seeing the investment in these malls, and that's what's driving the retailers investing there too.
Yeah, and there's a pretty good sized list of retailers that are primarily in malls.
Yes. Mm-hmm.
Of course, you think about how do they expand if they're mall centric when there's nobody building malls. So what do you say about that list of retailers, and what do you see from them?
I think they're opening an open air too. I don't think it's just a mall or open air. It can be both. And you've seen some retailers like Sephora, who used to be just malls, Now they have open air, and when they're opening, even within 5 to 10 miles, a 1 plus 1 is equaling 4. So I don't think it's either or. I think it's both.
Yeah, I agree with you. So let's talk about grocery.
Hmm.
In the retail real estate business, the last few years, it's been all about grocery, almost exclusively all about grocery. And then the grocery business, the last 15 years has also really changed because, the onslaught of different specialty grocers, Sprouts, TJ's, Whole Foods, et cetera. So what are your thoughts about grocers as anchors? What are your thoughts about the grocery business and what that says about consumer tastes and likes and dislikes?
A couple things. I think grocery anchored is always going to be relevant, very popular. And you know why? People go there the most. If you look at the average number of trips that people go to a grocery store, it's almost more than any other type of retail trip. And like you mentioned, there's more specialized grocers today, whether it's specialized to different demographics, different nationalities, smaller or bigger. I think probably one of the most expensive grocers I've seen that has a ton of traffic. Have you been to the Erewhon in Southern California?
Yeah,
I mean,
pretty crazy.
$20 plus smoothies, but there's a line out the door. So
Yeah.
I think that search healthy wellness, people stay there, they have interviews, they have dates, whatever it is, they're meeting friends. But grocers have become a very hip and modern destination.
Yeah. And it's interesting. The capital markets have gotten to the point in a lot of cases, Dana, where it doesn't matter. You could have a 20,000-foot grocer and a 400,000-foot center, and they still call it grocery anchored.
I know.
It's,
Amazing, right?
yeah. So we believe in that. We're doing several deals with Whole Foods right now, and with the capital markets really like them, and
Hmm.
I think for good reason.
Yep.
So Dana, let's talk about retail real estate. What are you hearing? What have you learned maybe the last few years about how retailers are finding their real estate? What's new? How are they going about that? What's mattering most? And how have you seen that decision changed over
Um,
the last few years?
Over the last few years, I think big focus on open air. That's definitely been topical because, like we know, there hasn't been many new development of new centers or malls. So open air is definitely top of mind. They're looking more at traffic patterns. And I think the other thing that's changed, I think we've seen a convergence. I no longer think you're talking about value centers or outlet centers because now the retailers are selling their full price goods, and whether it's value centers, whether it's malls, because where's the customer gonna be? It's not the name of this, it's not the type of center, it's what's the demographic nature, the household income levels, the drive-by of what's going by those centers that makes it more compelling and exciting. That is what I think has been one of the biggest changes. The word outlet is a word from the past. The word value, the word experiential is the word of today.
Yeah, and what we see a lot, Dana, what we have been doing, what we renovate centers into, and some of the ones we're developing now is you can't really put them in a box.
Right.
They're part power, they're part neighborhood and grocery, they're part lifestyle. They're really hybrid centers, and it's just more about retail real estate at great locations. It's not about
Mhm.
format. You agree with that?
Totally agree. And that's why you've seen even more flexibility in the size of space that retailers take. I don't think they're as rigid as they were in the past. It has to be this size box, and here's how we want the adjacencies. Now there's more flexibility.
So let's talk about trends. You being a researcher, helping people look toward the future. What are a couple of the big trends you see in retail, and how might those impact retail real estate going forward? And I'd love for you to share something that I might not have heard.
So it's all about agentic AI. AI is going to
Okay.
be at where we are today in AI. I can tell you, when we're sitting here and talking 2 or 3 years from now, we're going to be somewhere else because the pace at which it's being adopted, that we don't even know what it's going to be utilized for yet. Agentic AI, where it's anticipatory and changes the way that people think, very important to what it means for retail real estate and the retailers themselves. So it's very early innings. I think the bigger companies like the Walmarts are the ones who are adapting it first, and everyone else will follow. But I think that's going to be the big story 2 or 3 years from now, and how we see the retail real estate landscape with the retailers.
And so I'm telling myself a story about how my agent might impact my buying patterns in the future. Give me an anecdote. What might that look like,
Well,
Dana?
I think that's going to look like in March, they're going to know that you go away on spring vacation, and they're going to say, you know what? Your spring vacation is typically coming up on March 18th. Let me show you shorts that you typically buy and what the newest shorts are because you haven't bought them in a year. That's
Yeah,
going to
and
take
I
the
was thinking,
story.
got it. So I was thinking, yeah, so if my agent might know the 6 brands that I love, and when something comes out from one of those brands that's new that for some
Yep.
reason they think I'll like, I'll get some sort of a message from them. Hey, check this out, Terry, that kind of thing.
And can you imagine when your agent basically says, here's the Father's Day gift that you should buy your dad because you bought him this 2 years ago? Or here's the Mother's Day gift or Valentine's Day? It
Yeah.
may take all the forgetfulness out of the way.
Yeah. Hey, Terry, don't forget your anniversary's coming up.
Right.
Last few years you bought this. You might want to take a look at these. That's pretty interesting.
Yep.
Dana, one of my last questions, but one I'm excited to hear you address. If you're advising a retail real estate investor
Hmm.
on where to be convicted in investing in retail real estate, not just geographically, but
Yep.
you know, product type of retailers, what would you say?
I want to go where peers complementary to me are going as a retailer. But I look at the continued focus on open air because they have the experiential with the goods. And to me, that turns into an expanded lifestyle. And I want to go to the malls where they're occupied. I want to be in those centers. And I also want to look at who are the retailers who are investing in their stores. And I'll give you an example. There's a
Great.
new hip restaurant, new hip healthy restaurant out there. Have you heard of Pura Vida?
Oh, yeah.
Well, what I know is Birkenstock wants to go everywhere where Pura Vida is. Think about it. So where can you get complementary customers? Complementary is what builds the basket and what builds the loyalty.
Great. Before we wrap, anything that we missed that you think my listeners might want you to share with them?
No, I basically do a lot of consulting with a lot of the retailers, the real estate companies. Anyone would like to inquire about that, please give me a call and I'll put you in touch with our head of consulting, Tom Chin.
Dana, this has been an informative conversation. What I appreciate about your perspective is that you bring the consumer into focus for those of us who spend our days on retail real estate. The two worlds are so connected, but we don't often hear from voices like yours in our industry. Thanks so much for joining us on Leaning In.